single day. I'm gonna make something great. That's my way.
Hi everybody. I am Ginger Wolf and welcome Stripped Finance. This video is for informational and entertainment purposes only. I am a feature entertainer and stripper, not a financial consultant. Please speak to your financial advisor about any financial matters. And with that out of the way, let's get into the video.
Hi everybody, welcome back to Stripped Finance. I almost said Bikini Coin Girl, I don't even know why. But if you're interested in coins, go check out that channel too. Anyways, we are back with part 2 of MBS or Mortgage Backed Securities. This time we're gonna hit up the history part in the financial crisis. So, before we get started, you may have noticed Fred here. Fred is my money frog, and he comes with me to all of my bookings because I am superstitious and I believe that if I leave him at home, I won't make money. And I'm super paranoid. So here we are. Everybody say hi to Fred. He's a money frog. May he bring you good luck and lots of money. Even if it's in the form of coins. But you know, coins add up. Anywho, okay. Let's get to work. Mortgage-backed securities played a central role in the financial crisis that began in 2007 and went on to wipe out trillions of dollars in wealth, bringing down the Lehman Brothers and rolled the world financial markets. In retrospect, it seemed inevitable that the rapid increase in home prices and the growing demand for MBS would encourage banks to lower their lending standards and drive consumers to jump into the market at any cost. Scroll down. Once again, this article was by Julia Kagan and reviewed by Anthony Battle and fact-checked by Pete Bathburn. If I mispronounced any of their names, I am super sorry. Okay, the crisis. That was the beginning of the subprime MBS, with Freddie Mac and Fannie Mae aggressively supporting the mortgage market. The quality of all mortgage-backed securities declined and their ratings became meaningless. Then in 2006, the housing prices peaked. I'm going to take a quick pause here for just a second, because I don't know about y'all, but I know who Freddie Mac and Fannie Mae are. So, if you don't, you're really young, dude. Really young, or you've been living under a rock. So, back to where we were at. Subprime borrowers started to default, which is the failure to repay a loan. As a result, the housing market began its long collapse. More people began walking away from their mortgages because their homes were worth less than their loans. Even the conventional mortgages underpinning the MBS market saw the steep declines in value. The avalanche of non-payments meant that many MBS and collateral debt obligations based on pools of mortgages were vastly overvalued. The losses piled up as institutional investors and banks tried to and failed to unload bad MBS investments. Credit tightening causing many banks and financial institutions to teeter on the brink of insolvency. Lending was disrupted to the point that the entire economy was at risk of collapse. That was a mouthful. So, the bailout. The U.S. Treasury stepped in with Congress to authorize a $700 billion financial systems bailout, intended to ease the credit crunch. Also, the Federal Reserve bought $4.5 trillion in MBS over a period of years, while the Troubled Asset Relief Program, TARP for short, injected capital directly into the banks. Some of the measures of the bailout included the following: nearly $2.5 billion to stabilize the banking industry, $27 billion to stabilize the credit markets, $80 billion to support the U.S. auto industry, almost $70 billion to bail out the insurance giant AIG for the American International Group, and $46 billion was allocated to help struggling families avoid home foreclosures, which is a mortgage lender or bank seizing a borrower's home due to non-payment of the loan. On October 3, 2010, the authority to initiate new financial commitments ceased, essentially ending any new bailouts under the TARP program. Also in 2010, Congress authorized the Dodd-Frank Wall Street Reform and Consumer Protection Act. The Dodd-Frank Act reduced the initial amount of $700 billion authorized for the TARP program to $475 billion. Mortgage-backed securities today. Mortgage-backed securities are still bought and sold today. There's a market for them again simply because people generally pay for their mortgages if they can. The Fed still owns a huge chunk of the market for MBSs, but it's generally selling off its holdings. Even CDOs have returned after falling out of favor for a few years post-crisis. The assumption is that Wall Street has learned its lesson and will question the value of MBSs rather than heedlessly buying them. Time will tell. This lady is about as sold on them as I am. Okay? I am a firm believer that leopards do not change their spots. It's just the fact of the matter. It's how people are raised. And that set of, like, that worldview and that moral standing there is all a learned thing. It's something that you learn and evolve as you grow, right? But I think that once you get to a certain age, you're really set in your ways. I am also set in my ways, okay? I'm stubborn. But what are types of mortgage-backed securities, MBSs? There are two common types, pass-throughs and collateralized. But we already passed through this, like we've already done this part. So, we're going to take a break, talk about today's sponsor, right? They're not sponsoring me, I'm sponsoring them, okay? Because I have worked at this place for like 8 years now? 7 or 8 years? Somewhere around there? I think I started in like 2015, so that puts me like right at 7 or 8. 7. Puts me at 7. Anywho, Scores Gentlemen's Club and Steakhouse in Mooresville, North Carolina. It's been my home club. They're basically my second family. And I love that club. It's 2 stories, open concept on the inside. I sound like one of those bad home shows, okay? Open concept. But it's true. It's all big and open, and it's fabulous. So if you ever get the chance and you're in, the Mooresville area, stop on by. We're conveniently hidden behind the Waffle House, which is hilarious, okay? We used to have a Denny's, but COVID, they went out of business. So, one last piece of the article before we leave, and that is, what is the relationship between an MBS and a bank? Essentially, the mortgage-backed security turns the bank into an intermediary, which basically means they're the middleman again. That's all they do. All they're doing is basically delivering your promissory note to pay to the investors who are giving you the money to pay this. That said, though, they're still kind of, they're a little shady, okay? I wouldn't recommend keeping money in a bank, except if you need to pay for your bills. Typically what I do is I actually buy gold or silver rounds. Sometimes I buy copper, especially when copper was really hard to find, because I know at the very least they're always going to be worth something, and I like having physical assets to keep my hands on. So trust banks as you will. I'm not going to tell you what to do, but they can do some shady things sometimes. But I think that's actually going to be it, because that's all that it has here on the historical side of it. So thanks for stopping by. I'm probably going to record another video for the weeks out. And once again, if you like seeing videos with my actual face and my somewhat awkward way of talking, just leave me a comment down below, because if not, I'm probably going to go back to the whiteboard doodle thingies. So, see you next time. Bye! Hi guys, thanks for making it this far into the video. While I'm cooking you up some new financial advice, don't forget to like, comment, subscribe, and if you can, share. And I'll see you next time. Bye!